G'day everybody, Ryan from Green Taylor Partners here to talk to you about the hottest topic going around at the moment, the 2026 federal budget. So on the 12th of May, Treasurer Jim Chalmers delivered the federal budget and it's proposing some of the most significant tax reforms that we've seen in many years. So some of the big topics to come out of the federal budget. First one off the bat is negative gearing. So currently with negative gearing, if you've got a residential rental property, creating a tax loss, you can offset that against your other income, so salary and wages, business and other investment income, and generate tax refunds from that proposal. What are they proposing to do is from 1 July 2027 to limit negative gearing to new builds only. So there's very, very convoluted rules around this. So currently, if you're currently negatively gearing a property and it's existing, you can carry on doing that for the foreseeable future. Now, if you enter into a new purchase of an existing property from budget night, the 12th of May, you get to negatively gear until 1 July 2027. Now, any property purchased existing from 1 July 2027 cannot be negatively geared at all. Now, of course, after these dates, you can still build newly established residential property and claim negative gearing in your tax return. Going hand in hand with the negative gearing announcement is the capital gains tax general discount, the 50% that every individual taxpayer gets. So currently, if you own an asset, being residential property, farmland, commercial property, shares, cryptocurrency, goodwill in a business, if you've owned that for greater than 12 months, you get to discount your gain by 50%. What they are currently proposing is that from 1 July 2027, that the discount will be replaced by indexation. So these were the rules back in 1999. So we've had the CGT discount for the last 27 years. They're proposing to go back to indexation. So if you sell an asset that you currently own by 1 July 2027, you still get to apply the CGT discount. Now, if you're purchase an asset after 1 July 2027 and then sell it down the line, it will be under the new indexation rules. Now, to make matters a little bit more complicated, if you've got an existing asset and you sell it after 1 July 2027, we have to do a market value uplift at 1 July 2027 for that proportion, which you can claim the 50% general discount on, and then the gain above that will be subjected to indexation. So another matter to this is that if you have a pre-CGT asset and you sell it post 1 July 2027, that will effectively become a post-CGT asset and you will have to pay tax, whereas currently you don't. Also coupled with the CGT discount is a minimum of 30% tax on all capital gains. So if you are in the $45,000, below $45,000 taxable income, you'll be paying 16 cents currently. Now they're going to propose that on that gain, you'll pay a minimum of 30. If you're above the $45,000, it'll be taxed at your marginal rates as it is now. Another massive proposal that they are currently making is a minimum 30% on trust distributions from discretionary trusts. So if you operate a business or an investment trust and you distribute to your beneficiaries, they are going to propose the trustee pay 30% on that distribution and the beneficiaries get a non-refundable credit. Now, thankfully, this excludes primary production and testamentary trusts. However, it will affect everyone else. Also from 1 July 2027, they are proposing a $250 tax offset for all working Australians. So if you receive salary and wages within your tax return, you'll be automatically entitled to a $250 tax offset. Also to do with working Australians is a standard $1,000 tax deduction. So if you have salary and wages over $1,000, you can claim up to $1,000 without any substantiation. In relation to businesses, not much happened within small business from the proposal in the federal budget. However, they've made a permanent increase to the instant asset write-off of $20,000. So from 1 July 2026. So it was $20,000 proposed up to 30 June 2026. Now they've just permanently extended that out because it was always legislated to come back down to $1,000. In relation to companies, they are proposing to bring back the carried back losses. So during COVID, we had the ability, if a company made a tax loss in the year, that we could apply it back to previous years and claim tax credits back. So they are proposing to bring that back in from 1 July 2026. A very, very big 2026 budget, a lot of tax reform changes. Now, these are only proposals at the moment, nothing is legislated yet. So we will be keeping as up to date as we can and providing information as we find out more. We'll be also providing more detailed breakdowns in relation to the bigger ticket items such as negative gearing, CGT and trust. If you have any questions or queries of how this affects you, please contact your trusted advisor at Green Taylor Partners.